Today, we're talking about the UiPath IPO as this company goes public this week. I'll share some of the most important information about the company and the actual offering that will be hopefully helpful to you in making the decision if investing in UiPath stock makes sense for you. And as a bonus, I'll also share some of my own thoughts as to what price I think the stock could be reasonable to buy it at. But first, I'm Kevin, and we've been talking UiPath here and there for about 5 months now. In fact, I put out a few videos on them in December, with the big one being the video that previewed the 7 big companies I was looking to come out in early 2021 that I know a lot of you watched because it's one of my most watched videos ever. Well, with Coinbase going public last week, this makes UiPath the 7th and final company on the list to go public. So I think we did a pretty good job in our predictions with those 7 companies, as they all came out in the first third of the year. Now the question is this a case of saving the best for last? Well, we're going to try to answer that. Not as a direct comparison to the other 6 companies, as much as a look at how good the company looks on paper and how that translates in a cooling off IPO market, as I'm sure a lot of you have noticed that IPOs and SPACs aren't on fire like they were for most of the past year. So to that point, does investing in a UiPath IPO in mid-April 2021 make as much sense as investing in one, say, mid-January 2021? That's a big question that we'll work through together and try to answer. So as a very quick refresher, or for some of you, maybe an introduction, UiPath is a company whose platform leverages artificial intelligence to enable what they call software robots to perform a lot of actions, similar to what a human would do when executing business processes. I have to say that every time I hear the term robots from UiPath, it completely makes me think of the traditional idea of a robot, like Rosie from the Jetsons. I'm sure some of you don't know what the heck I'm talking about, so just keep in mind you might be a little younger than me. But obviously, when they use the term robots, they mean the use of their software and code working to log into applications, pull out information from documents, moving folders, filling in forms, and updating information fields and databases. In their S1 filing, UiPath says that their robot's ability to learn from and replicate worker steps in executing business processes drives continuous improvements in operational efficiencies and enables companies to deliver on key initiatives with greater speed and accuracy. And this goes well with a company's proclaimed mission to unlock human creativity and ingenuity by enabling the fully automated enterprise and empowering workers through automation. So if you think about your job, how many things do you do that are tedious and repetitive? Basically, just plain boring. And how does that affect your job satisfaction? If you're like me, that's the part of work I wish I could offload to someone else, and that in essence is what UiPath aims to do. And the idea is that employees could better use their time and skill in a more effective and fulfilling way. All sounds really cool, right? Now with that background being understood, we still need to know if this sounds cool tech AI company makes sense as an investment. So let's dig a little further into their IPO filing and see how they run their businesses and if they are winning over customers with the product they're selling. So as far as customers, UiPath claims that as of January 31st, 2021, they had just under 8,000 total customers, including 80% of the Fortune 10 and 63% of the Fortune Global 500. This was up from just over 6,000 customers a year ago earlier, so by my math, they increased their customer base by about a third, or approximately 30 to 33%. Some of their current customers that they listed in their filing are names you're probably familiar with. Big names like Adobe, Applied Materials, Chevron, Chipotle, CrowdStrike, CVS, and Uber Technologies. So far, so good, right? Very solid list of customers, but the next thing to ask is, do the customers that UiPath obtains stick around and keep spending? I mean, it's important to know if customers are sold on the idea, but then ultimately don't see a return on their investment and then leave. Well, the company has a key metric of theirs that looks at the ability to expand within their customer base, and they do this by looking at a dollar-based net retention rate, which represents the rate of net expansion of annualized renewal run rate, which they call ARR for short. Then they apply that to their existing customers over the last 12 months. At the end of the day, the metric lets them know if their customers continue to spend more over time. Well, the answer appears to be yes, as according to their S1 filing, their dollar-based net retention rate was 153% in 2020 and slightly down, but still at an impressive 145% in 2021. And that still translated an actual ARR growth rate of 65% year over year in dollars. Now let's jump into the big financials. The company generated revenue of almost $608 million in 2021, representing a growth rate of 81% over 2020 revenue of $336 million. Impressively, they also reported a very significant narrowing of their overall net loss from $520 million in 2020 down to $92 million in fiscal year 2021. Looking at the chart, you can see that expenses dropped in every major area, including sales and marketing and research and development. Sort of surprising to see that amount of expenses being cut by a company that is growing so fast. Some of the expenses, particularly on the sales and marketing side, were likely as a result of the pandemic, so something to keep an eye on going forward. Speaking of looking forward, let's take a look at the market outlook. IDC estimates that the market for intelligent process automation had a value of $17 billion by the end of 2020 and is expected to grow at a compound annual growth rate of approximately 16% to $30 billion by the end of 2024. Now, UiPath actually believes the market to be more than double of that, as they feel adoption will be quicker. So I guess we'll have to see how things evolve going forward. As for competition for the robotic process automation market, UiPath lists quite a few competitors, although mostly smaller companies. But two names on the list that will catch most people's eyes, the tech giant Microsoft being the obvious one. But the one that's clearly a more direct competitor is Automation Anywhere, who is backed by SoftBank. Unfortunately, since Automation Anywhere isn't public yet, we can't compare their revenues, customers, or subscription numbers. Moving on, let's take a look at their valuation, one of the more interesting aspects of this IPO. Back on February 1st, UiPath announced that it had closed a $750 million Series F funding round at a post-money valuation of $35 billion. That meant that their valuation more than tripled from a Series E round of fundraising last July, when the company was valued at $10.2 billion. Okay, now this is where it gets interesting. When UiPath released their first suggested pricing range in an amended S1 filing, it came in at $43 to $50 for their IPO. That would have actually suggested a lower valuation closer to the mid-$20 billion range. Needless to say, that's not typical. A lower valuation would absolutely not be expected. The question that immediately came to mind was, what changed from February 1st to now? Now obviously, we don't know what data the private investors were provided during the Series F funding round, but I would assume it would have been estimated fiscal 2021 data pretty similar to what came out in their public filing. I just wouldn't expect a huge difference that would have resulted in this type of drop in their valuation. But the other thought, and for someone that has followed IPOs closely over the past year, I felt that the timing of going public could be the big factor. So thinking about this a little more, if UiPath made the announcement of their Series F round on February 1st, then the actual fundraising likely happened in January. And at that time, the IPO market was still pretty hot. Think about Poshmark and Affirm coming out and trading way over their IPO pricing, which by the way, they're nowhere near where they opened at right now. So then, as we got into the middle of February, things started to take a turn for tech stocks, IPOs, and SPACs. So looking at this from my perspective, it appears that UiPath and their underwriters were taking this in when coming out with their initial pricing range. And maybe starting with that conservative range just to see what their reaction was. Now as of this recording, UiPath has upsized the IPO by about 2.5 million shares and raised their anticipated pricing range, but not by a huge amount, as they're now expecting their IPO shares to be sold between $52 and $54. But that still comes in at a valuation only around the upper $20 billion range, say approximately $28 billion if the shares are priced at the top end of the range at $54, and that obviously is still less than the $35 billion valuation in February. Now before I get into my thoughts on the company and at what price the shares might make sense to buy at, let's go over some other details of the offering. As for the date of the UiPath IPO, pricing is expected this Tuesday, with public trading then set to begin on Wednesday, April 21st. UiPath stock will then trade under the ticker PATH. So keeping in mind that I'm not a financial advisor and I'm not making any recommendations, as I'm only sharing my own personal thoughts, as I think about if investing in the company makes sense from the perspective of what they do and the financial data they've reported, I definitely think it's a company that has a lot going for it. Strong growth and customers that stick with them. The elephant in the room and what I'm wondering is how this IPO looks as of right now in the middle to the end of April as compared to when I first talked about them in December, when this IPO will be getting everyone's attention. As far as valuation, if the stock were to trade within the suggested range, I'm getting a price to sales ratio of around 46 on trailing 12-month revenue that grew over 80% year over year on a company with positive cash flow and a significant narrowing in its net loss. So while not cheap, this stock is one I'm definitely interested in, particularly if the rate of growth stays strong and the market opportunity data suggests that it could. And whereas last year as other companies doubled right out of the gate when they first started trading, with this environment, where IPO interest has cooled and non-profitable technology stocks have been hammered in some cases, Maybe this is the time for a retail investor to get a solid growing company without having to pay a crazy 100 to 150% premium when it starts to trade. And I'm thinking of like what happened with stocks such as Snowflake and Airbnb. And if UiPath stock is sold at a lower valuation at its IPO to where private investors paid for it just a couple of months earlier, maybe this is the opportunity where the timing is right to buy UiPath, where retail investors could get in at a fairer price. Now, prior to the cooling of the IPO market and tech in general, if I was an investor completely sold on UiPath, but not willing to go overboard, I personally would have been willing to pay up to about $80 a share for UiPath stock. But with a different environment, the one we're dealing in now, I think I would look to get in at a lower price. I think if it were available up to $67, you could convince yourself that while you weren't getting a steal, because it would still be pricey from valuation metrics, you could find ways to justify paying that price, particularly if you think the tech sector was only taking a short-term breather. So that's my take. What's yours? Are you buying into the UiPath IPO? And if so, what price are you looking at? Let me know in the comments. I always enjoy hearing what everyone in the community thinks. Alright, so I hope you found this video helpful, and if you did, please like it and share it with anyone you think would find it interesting. We're always looking to grow our community so that we can have more ideas shared in the comments. And if you're new here, definitely consider subscribing. It's totally free, and it'll make sure you don't miss any new videos as soon as they come out. And with that, I hope you have a great week of trading. Thank you for watching, and have a great day.